Another episode of Minds at Work. I pulled the short straw today because Mohammed Zainal, I think, is off sick, unfortunately. So I'll be flying solo, and you'll basically be getting a TED talk from me. So I'll start by giving an introduction to myself. So some of you will know me, some of you won't. My name's Sandip. I work in the risk team here at GFH. I've been here for just over 2 years now. Before that, I was working in London, and this is my first experience of working in the Gulf, so it's been very interesting. Part of what I do is, yes, I focus on investment risk, but another small part of what I do is every week, I create a newsletter which goes out to clients with the help of CCD and Treasury. Every Sunday, there's a newsletter that goes out to clients, and it summarizes what's happening in the world in terms of the global economy, any updates on data points, things like that. So when I got approached a couple of days ago by CCD somehow they reluctantly persuaded me to speak today. They suggested that, why don't I talk about something similar to what I produce for the Macro Weekly, which is an update on the market and what's happening in the world. For me, that's interesting. I'm a bit of a nerd. I like data, I like charts, but I know that's not everyone's cup of tea, right? So I was really struggling as to what topic to choose. I wanted something that everyone can relate to, everyone's interested in. People won't get bored after 10 minutes. So I was struggling, and then one day I came into work and I had inspiration, and that person that gave me inspiration is my colleague Manar. I sit next to Manar in the risk team. And if you know Manar, you'll know that she's a very bubbly, happy person, generally. But one day I came into work and she was super depressed. I mean, I've never seen her look like that before. So I thought something's wrong. I'll ask her, is everything okay? And she looked up at me and she said, Sandeep, have you not seen the gold price? It's gone super duper high. I'm very stressed out. I said, okay, but why does that make you upset? And she said, don't you know, next month is the jewelry exhibition, and I was gonna buy a bunch of stuff. Now it's gonna be super expensive. So I thought, okay, gold is a good topic. Everybody can relate to gold. Everybody likes gold, whether you invest or whether you just like jewelry. And yes, I'm from the UK, my background is Indian. If there's anything I know about Indian people and Khaliji people, it's that we all love gold, right? For various reasons. So I'll try and keep this short. I know we are all busy, we have jobs to get back to. But I just wanted to start by talking about the journey of the gold price this year. So everybody knows that gold is now at all-time highs. Everybody will have seen the news, people are talking about it. We started the year with the gold price at $2,500 per ounce, and now it currently stands at over $4,000 per ounce. The breakthrough moment was last week when gold for the first time breached that $4,000 barrier. That made a lot of headlines, there's an explosion in the news, people start getting interested. But I think it's really important, before everybody starts asking, should I buy gold, is it too late, to pause and think about why is there such strong demand for gold right now, right? And it all ties back to what's happening in the global economy, what's happening in the markets, the mood of people in the market. So the way I read it, again, for me, I'm not giving financial advice or anything. Unlike previous talks, there unfortunately will be no discounts on gold or anything coming out afterwards. But the way I read the market right now is there are 4 main reasons as to why gold is at all-time high. The first one is a classic reason. Gold has always been viewed as a safe haven asset. So what does that mean? It means that when the world looks a bit crazy, when uncertainty is high, whether it be economic, political, even things like war breaking out, right? We had a few scary moments earlier this year with the missile scare and everything. That's when people turn into, they adopt a more risk-off mood, right? Which means that they're looking for somewhere safe to park their money, essentially. And as we all know, this year has been very volatile, right? I think the biggest contributing factor to that is obviously the big orange elephant in the room, which is Trump coming back into power at the start of the year and implementing a lot of unorthodox, unconventional, and unpredictable policies. So that has clearly fed into a risk-off sentiment in the market, And therefore, institutions and also personal investors are choosing now to allocate some of their portfolio to gold. The second point relates to the fact that the US dollar has depreciated quite significantly this year. The US dollar is down 10, 11% this year. I think we're all aware of that. We all get paid in US dollar pegged currency. For me, that basically means a 10% pay cut if I want to transfer money back to the UK. So we're all aware of what's happening with the US dollar. But why has that happened? Again, it links back to the first point, which is all the uncertainty, all of the volatility around US politics and the economy right now means that there's less confidence in the US dollar and US denominated assets. So people are looking to diversify away from US dollar as a currency. So central banks are doing a de-dollarization trade where one way that they can reallocate away from the dollar is to park their money in gold, which is viewed as a hedge to the dollar falling further. The second one is that gold globally is priced in US dollars. So if the US dollar has fallen in value by 10%, that means for non-US investors, which unfortunately doesn't include us, that means they basically get a 10, 11% discount on gold compared to how it was priced before. So that's also a second really important contributing factor. The third one is another one that we'll all be aware of. Interest rates have been gradually falling over the last 18 months or so. And you might ask, how does this relate back to gold? Well, we all know what buying and investing in gold means. It means you buy something, you keep it safe, and you hope that it increases in value, right, in the future. One thing that gold doesn't give you, though, is income. You don't get any recurring income from gold, right? It's just capital appreciation. Whereas if you put your money in fixed income, even deposit rates, wakala, whatever it may be, you're basically buying recurring income there. If interest rates are falling, then naturally the income potential that you can get from these other assets, whether it be real estate, fixed income, deposit rates, has reduced. So essentially, it means that the playing field has leveled out. It means that actually, if I'm getting less income here, I might as well put my money in gold instead, right? So the opportunity cost of holding gold has also fallen. The last one, I think, for me, is the most interesting one, which is kind of links to me standing here and talking about it today. The fact that I'm stood here and I've chosen this topic means that everybody knows, right? Everybody's looking at the gold price, whether it's because they want to go to the jewelry exhibition or because they want to invest, whatever it may be. And gold has always been an easy asset to buy, right? You don't even need a bank account. You can take a bunch of cash, go to the gold souk and buy some gold if you want. So it's always been easy to buy, but now more than ever, it's even easier and accessible for retail investors to invest in gold, right? Everybody on their phone will have, I'm sure, some sort of financial app which allows them to trade and invest in gold ETFs or other gold-related securities. So that's another big factor which is increasing the current demand for gold. Linked to that, I think, is one story that doesn't get mentioned enough is, again, what's different this time to 5, 10 years ago? The innovation that has come from fintech apps and people being able to access retail trading on their phones and digitally has really blossomed and really boomed in certain parts of the world, right? If I think about across the pond, there are 1 billion Indians who, in the last 5 years, have all started to participate in financial markets through investing through financial apps and trading platforms. These guys already love gold, right? I can say that because I'm one of them. So again, all of these things coming together has created a perfect storm where we have seen gold now in percentage terms, it's up 60% so far this year, right? So a lot of people will think, okay, well, gold sounds pretty good, 60%, nobody's going to say no to that. And people are already saying that gold is going to be the best performing asset this year. And if you think about it, we always associate gold with being in first place. So at the Olympics, you come first, you get a gold medal, you don't get a silver medal, right? But interestingly, if we look at other precious metals that are also tradable and investable, there are lots of other examples that have performed better than gold this year. So silver is one of those. The reasons behind it is that silver is also viewed a little bit as a safe haven asset, but more importantly, it has a lot more uses, right? Gold is nice to look at, it's very glamorous, but in terms of its uses, it's not that useful, right, compared to something like silver. Silver is used a lot in the production of solar panels, in electric vehicles as well, all the wiring that goes into EVs, they need to use silver for that. So these sectors by themselves are already growing so fast, and that has also contributed to growth in silver. If we look at two other metal investments as well, palladium and platinum, these are talked about less frequently, but they have also outperformed gold quite significantly this year. If we look at, both of these have industrial uses. I'll speak about one of them, which is catalytic converter use with palladium. So for those of you who don't know, palladium is used a lot in the creation of catalytic converters, which are used in ICE cars, etc. I'll raise this point specifically for Baha, because Baha is always asking me, Sandeep, what's happening in the UK? It's going crazy there, crime is going crazy, right? I bring this up because in the UK, everybody knows that catalytic converters contain palladium, because for the last 10 years, there has been a lot of organized crime where people are stealing, they don't care about your car, they wrench up your car, and they crawl underneath, and they steal your catalytic converter, because the value of the precious metals in that is easily tradable and is also increasing. The last example I wanted to draw attention to is everybody can invest in gold, whether it's through investing directly and purchasing it physically or investing through a gold ETF. But another interesting way to get exposure to gold is through not investing in gold itself, but in mining companies that are producing gold. So that's an indirect exposure to gold. And if you look at the chart behind me, you'll see that the top line, which represents ETF exposure or an ETF product that invests in gold mining companies, has performed twice as well as gold this year. And I mean, we're all in the business of investment, so it's interesting to think about why is that the case. Gold mining companies are pretty simple, right? I mean, their costs are known. They have plant, they have machinery, they have labor, they're extracting minerals anyway. It just so happens that overnight, the product that they sell has gone up in value by 60%. So they are now a lot more profitable than they were before, whilst maintaining the cost base at its existing levels. So that's an example of operational leverage, where the increase in the price is now feeding directly through to the bottom line of these companies. But again, these are not new things right now. You can see that in the last couple of weeks, the pricing of all of these investments has accelerated very, very rapidly. And again, that is a lot due to the fact that retail investors are now getting involved, which makes it a bit scary for me, because for me, that is a sign of, yes, it is right to question, is it too speculative? Is it sustainable? Retail investors are generally always the last ones to get into the market and the first ones to get burnt when the market goes down. So I guess the conclusion here is, Manar, if you invested in some of these, then you wouldn't be so worried about the exhibition next month. And then I just wanted to end on this final slide, right? I think everybody's key question will be, okay, this is what's happened up until now, but what is going to happen in the future? Is the price of gold going to continue to increase? Again, if I had the answer, then I would quit GFH right now and I'd become a very rich man. So I don't have all the answers. What I can say is what my views are and how I see the market. So as we spoke about at the beginning of this, for me, one of the key drivers to the gold price is its status as a safe, reliable asset, okay? So you're really gonna be making a bet on whether the world is gonna continue to be unpredictable and volatile, or whether we're gonna go back to a more stable environment, right? Nobody knows the answer, but things that I like to remind myself of are that Trump 2.0, we're still in the first year of his presidential campaign. There's still a long way to go. We're only 20% through his government. There's still going to be 3 more years of this. So I would expect it's still going to be a bit of a bumpy ride. And the second one is that, and you can see that from this chart behind me, which I'll explain. So I know I'm stood right in the middle of it, but this chart is basically giving an indication of US economic policy uncertainty over time. We are at the end here in the red circle. You can see just how elevated it is. So the market right now is pretty spooked, right? It is, it's perceived that there's a high level of uncertainty in US economy and US politics right now. If you go back a few years, you can see how the levels that we reached during the pandemic, we are at those levels right now, right? So the pandemic itself was a pretty crazy time. Essentially, the whole global economy shut down. And we're kind of in that mood in the market right now. So do I think that this is going to change overnight? Probably not, right? I mean, the same guy is going to be there tweeting his things, moving the markets. So I think in the short to medium term, you know, there could still be some way to go. Personally, I'm a long-term investor, so I don't care so much about this noise. For me, the headlines of breaking a $4,000 ceiling, I see it in a positive way, which is that if I'm invested for the long term, that $4,000 ceiling that's been broken is basically just setting a new future floor, right? So those are my views. There's also a lot of, there's a consensus view in the market that the Federal Reserve will reduce rates at least once more this year. So that is also going to, you know, provide some impetus to the gold price going forward. So that's kind of it. That's the end of my TED Talk. Again, I wasn't trying to give any financial advice or anything. It's just I am interested in the market. I think, again, as investment professionals, it's important to know what's happening, but also to always ask why. Why is this happening? Not just for us as a bank, but also for our clients, right? Like, it's our duty to be aware of what's happening so we can make the best decisions for our clients as well. So yeah, that's kind of it. I don't have anything more to add. I guess I can open the floor to questions if anyone has any. So yeah, please shoot. Otherwise, back to work. So.
Thank you, Sandeep.
Thank you. Thanks, guys.